Hello everyone, welcome back. In this episode of Bitcoin Trade, I'm going to do a chart analysis. Um, if you haven't already known, the price has been declining. This is a 12 hour on Bitfin, and that's the current price. And um, you've seen that it hasn't broken above this moving average here. It's a weighted moving average. Really took a beating right around here. Not sure what's causing this particular sell-off here, but I'm assuming there's more sellers than buyers. Haven't seen any recent news because everything I've done so far the news has been coming out around here. There's nothing here to indicate that there should be this drop off here, but the fact that it did not break above or break out of this moving average being the resistance that you see along here, and it's been that way for a while except for here, but finally broke out and then came back down. So anyways, we're getting a low price of 397.17, which in my opinion is well, I've been buying anyways. So as you see now that the drop has occurred, it's starting to go into a triangle here, and then we'll see if there's more downturn or if there's more upturn. Now, for the most part, it's been a down trend, and what it may go sideways and may hit up again. So I don't have any lines here, but I can tell you that you'll know if it's a possible uptrend or a breakout when it can go beyond the last high. So right now, if you look here, you'll see that it's always been a lower high, lower high, lower high, lower high. Oh, that's not even a high. I would say that's still considered one move. So we'll have to see what high, and most likely it's gonna at first hit up against the 10 period average. This is again a weighted average here. So it'll hit up against here, and then it'll bounce around, and then it'll compress, and then it'll either break up or break down from there. And so take your positions, um, and you know, the only way you can, for me anyway, one of the strategies that I've been using to limit my risk and losses and gains, well, not, you don't want to limit your gains, but potentially minimize your gains and maximize your, minimize your loss and maximize your gain is, I've mentioned this before. If you're just a seller and you're just selling, um, or if you're a miner just selling, you only have one choice but to sell. But if you're investing and you're doing this for yourself, and if you're doing multiple things, you're mining, you're investing, you're buying and selling, you're also using, you got a huge, tremendous advantage in that whatever amount that you want to invest, that's the amount that you're risking. Everything else on top of that, or every other trades that you're doing, you're basing it off of your original investment. And so, how do I maximize returns? Is I always have a little bit of both of um, of course, legal tender and bitcoins at all times. And so, as the price goes up, the Bitcoin is obviously more valuable to be trading. As the price goes down, you would want to buy bitcoins. And so that's kind of how I've been limiting my losses and maximizing my gains, is that on my original investment amount of how many bitcoins I want, and I still have that original amount of bitcoins that originally invested in. And so as long as you maintain that, everything else is just a trade. And as long as everything else is a trade, the interesting thing about virtual reality is that there's no time. Once you get a better understanding of how virtual reality can work for you, some of the things you can do now is you can trade the past and the future. So let me try to explain how I trade the past or the future. Okay, so past trades. How do I deal with past trades? Well, on this is where your original investment comes in. If you whatever you invest, like if you invest in 10,000, a million, $50, whatever, that's what you have in Bitcoins. Okay, and as you're trading or you're buying and selling, you're moving in and out of positions here. Um, Whatever bad trades you have or any losses you have, you probably want them in Bitcoins. Now, this is a very, very common thing to do. If you haven't already been doing it, you're probably going to start doing it, because this is a great way to reduce your tax liability. Is the trades that you make that are gain, show them as gain all throughout the year, right? Now, depending on when your year ends, your tax year ends, what you want to do is you want to accumulate the Bitcoins that maybe you didn't do some good trades on, or maybe they were really bad trades. In either case, that's what you want at risk, is your original investment. And so everything else is just a trade on the spot. Spot trading is what I would call it. Anyways, so some of the ways that you can trade the future and trade the past, and I'll go into trading the past first, okay? Basically, how I trade the past is I'm trading my losses. So at the end of the year, your tax year, one of the things you could do is you can liquidate your losses, or realize your losses, or claim your losses, one or the other. And so, because you have to consider, not all your trades are, for the most part, a gain. You don't, it's hard to, it's possible, but it's hard to. I guess it depends how long you want to wait. Now, for me, the losses in Bitcoin are measured in Bitcoin. So whatever the price is now, which would be 398. So if I bought some at 600 and I'm still holding on to those Bitcoins, that's a $300 loss. So what I do at the end of the year is, all I do is I buy, or I maintain a certain amount of Bitcoins that are losses, and then I claim that as at market price. I believe they call that mark to market. I'm not sure, but in doing that, I've essentially claimed a loss. But I haven't sold any of those Bitcoins, so they're not realized loss. They're just mark to market. So whatever they are, that would be considered a loss. But I haven't realized those losses. They're just marked to market, if that makes sense. Anyways, if the price just continues to go down further, for me that's not a problem, because I'm a user, all right, and I'm a long-term investor. Even though I go in and out of trades all the time, long-term, what I'm trying to do is trying to gain more in Bitcoin. So at the end of my tax year, if the price continues to go down and how many Bitcoins I have, I'm going to say, well, I took X amount of losses in mark to market, and just claim that at that time. I don't know if that makes any sense or not, but at that time, at that point in time when my tax year ends, and I have a loss in Bitcoin that offsets against any gains, that works for me. But here's the beauty: I get to claim that loss. If I'm not mistaken, I have to check, but I get to claim that loss. Maybe not necessarily realizing the loss, but claiming the loss, and then it really doesn't matter. Like maybe next year, all my losses are all gains, and I have to pay tax on those. Doesn't really matter. Anyways, the point is I want to hold on to those Bitcoins. So that's how I'm trading the past is Bitcoins that I've already purchased, okay, already invested, did, past tense, I'm going to be holding on to those. And that's how you're trading the past. That's how you can trade the past, all right? So in virtual reality, time has no relevance, neither does space. So you can trade the past. You can go back into the past and trade those, which you've already invested and taken a loss on. Now, next part I'm going to talk about is trading the future. So everyone heard of future contracts and futures trading and all that. I've never really done any of that, but here's what I'm doing now. As I do many things. I guess you could say I do mine for Bitcoins, since I am a miner, and I'm also creating other miners as well. And one of the things you can do in trading the future is as the Bitcoins come into creation and you accumulate Bitcoins, as your miners accumulate Bitcoins, and when it comes time for them to trade with you, okay, one of the things you can do, since and this is a big part about being a user, is you can escrow your own trades. All right, you don't have to have an escrow license or a bit license, or you don't need anything. All right, all you need is your name and your testimony, and so and of course you want to stand up for yourself, right? So stand up tall and straight, and in your name, bear witness, and that's going to be your testimony. So that's all you need. And so you can escrow your own trades into your own bank account. All right. Maybe not even a bank account. I mean, you can use. I guess you won't be the escrow. But you can employ an escrow. So the money can go somewhere else. Anyway, the money's there. Once the money's there, it's there, right? Legal tender. So as soon as the miners release Bitcoins to me, and of course I would be purchasing from the miners, and from there, once you get Bitcoins in hand, you can then turn around, and for those people who traded already in escrow, and there's no time limit in escrow really, other than what you set. Some people want it right then and there. Other people will want what I refer to as the best price. You're giving them best price because they've already funded the trade. It's just in escrow or in transition or in transaction. I know that Bitcoins are pretty, for the most part, very, very fast, but there's no time limit on Bitcoins. Okay, there's no, how can I say this? I know that you can send it anywhere around the world at any time. There's no waiting a day, 2 days, but it doesn't mean you don't have to wait. Okay, 2 days. It doesn't mean you can wait. It's up to you. So some trades require a longer transaction period, whether it be a week, a month, it doesn't matter. The point is, it's in escrow, and whether you're escrowing it or you're employing an escrow, it doesn't require any escrowing license per se. So that's a way to trade the future. You're trading the future. In other words, let me see, how can I say this? The trade is in a future time, but there's no guarantee, of course. But at a future time, that as soon as Bitcoins become available, because this isn't Bitcoins aren't like legal tender. There's no printing of the presses here. It's a certain amount allotted to come into creation. And if someone wants $1 billion in bitcoins, well, they're not going to. It's going to be hard to get without driving the price up. If you buy it at market price on existing bitcoins out there, or already bitcoins that have been created. So that's a way to trade the future. So there's a way to trade the future and trade the past. Okay. And so that's an interesting concept, and I've been playing around with this idea, and I have to say it's been working. In some ways, it's a little bit safer, and it does reduce a lot of cost and risk, to the point where if you can wait one day, and it's amazing. Some people can't wait one day. It blows my mind. But if you can wait one day just to get your bitcoins, you'll be able to get it at a phenomenal price. And the thing is, since I'm determining how to, since I'm making the trade, the agreement is basically you can strike when you receive your bitcoins, but you don't have to strike when you made your payment, or when you put your funds into escrow. It's just there as a integral part of the trade, because mainly I have to admit, if it weren't for all the scammers and hackers and fraudsters and everything, I wouldn't have to do this. In some ways, I wouldn't be able to do. I wouldn't be able to trade the future or the past. But because there's so many deceptive individuals and entities out there, that the evolution of my trading has become to the point where I'm able to trade the future and the past, because I have to avoid risk and fraud. And so in some ways, it's not like I'm doing this to avoid any regulations or any any laws or anything, or any tax codes or anything like that. I'm doing it because it's really becoming an integral part of the trade, because there's just so many scammers and fraudsters and just people who are not trustworthy whatsoever. And that's kind of the issue. So by trading the past and the future, it's hard for the fraudsters to keep up with these concepts, that they can't even keep up with them. And then they have to come up with a whole new, fraudulent scheme just to cope with it. So it may not even be worth their time to do this. So that's another reason why I'm trading the past and the future. And you're able to do that through virtual reality, because virtual reality has no, there is no space, and there's definitely no time. I mean, there's definitely time, but if you ever dealt in virtual reality, you'll realize that time has no bearing. Anyways, so that's my chart analysis. That's my little info that I've been that I'll share with you about how some of the trades that you can do. You can literally trade the past and the future with your bitcoins. So experiment with that. I know it's a little different, and it's a little new, but I think you'll find it less risky, not so volatile. The gains depends on your gains, but at least you'll have a definitely a safer gain, a safer return on your investment. It may not be as much as you want it to be, but depends how you want to do it. I mean, I'm doing everything I can to ensure the Bitcoin network is maintained, and I'm doing everything I can to make sure my network is maintained and it's functional. So anyways, the price has gone down quite a bit, but what's awesome, and depending how you want to view it, I get a lot of Bitcoin for the same amount of money, a lot more Bitcoin. So in that sense, it's good. The bad part is it's gone down in price, but if you're in it for the long term, you'll probably won't mind this price because you're jumping on it as much as you can. What's funny is although the price is going down, I'm noticing higher demand, off the book higher demand. In other words, you're not going to see this going through the exchanges. You're going to see it through peer-to-peer, and I see a higher demand peer-to-peer as the price has gone down. It's getting harder and harder to get Bitcoins. So anyways, now I'm going to go to another section of this episode of Bitcoin Trade, and just let me see what I'm going to see where it is. Okay, all right, here it is. So I'm just going to go over this. There's a lot of things that are going on, and I'll try to go into it, but here's an article by Cointelegraph here. Banks want Bitcoin regulated but see same benefits we do. Of course. And let me see what other things are going on here. Oh yeah, here's another article that I've been reading, and what is this? What is this talking about? Oh, okay. Falling Bitcoin price is perfect storm for centralization of Bitcoin mining. And I'll get to those a little bit later. And then this one here, I don't know who this person is, but it looks like they're going to integrate Bitcoin into their payment. So these are some recent news that I've seen come up. This is CoinDesk here, and they've kind of more or less are kind of confirming what I've been trying to say or been saying, is that well, let me first start with this particular article. All right, falling Bitcoin price is perfect storm for centralizing Bitcoin mining. So this particular article is talking about how the difficulty is going up, and then the prices falling down is driving a lot of the mining rigs out of business, or out of that space, and that's going to probably continue. And at the same time, centralizing mining is not going to be that central. It's still going to be decentralized, but except there's going to be less groups, just because the economy of scale, to keep up with the increasing difficulty in getting Bitcoins. And so you're going to start seeing mining pools starting to pool bigger, maybe even merging together. But you're probably saying, well, that's centralizing. Well, not quite, because there's so many nodes all over the place. You'll probably have, if you can have at least 3 pools, 3 Bitcoin mining pools. Even one with 51%, I don't know what the deal is, but if they can keep themselves at a 30-30-30 and a 10% for all the others, that's still pretty good. That's pretty decentralized, because the economies of scale and the difficulty rate is going to make it harder and harder, to the point where there's only going to be one mining rig, or one mining pool, or one mining group. And at that point, it's about survival and making it all the way to the end of this long journey. And so I mentioned in my previous episodes how there's probably going to become only one mining group, and wherever that mining group is where you need to go with your Bitcoin. So I mentioned that, and then it's kind of already happening here. Short term, it sucks for anybody who's mining, small miners, mid-sized miners, but long term, it's probably going to work out for the best. And then, of course, this here, yeah, you're going to start seeing a lot more integration. Um, I just think that Bitcoins are going to become more and more prevalent. Because when I first got into it, only 3% of the population knew about Bitcoin. Now there's 50% know about Bitcoin. So that's quite a big jump. So from 3% to 50% that just know about it, what you're going to see is the acquisition or the purchase or investment of Bitcoins themselves are probably going to come into play trailing after that. So that's just my thoughts on that. And then, of course, the last article here, banks want Bitcoin regulated because they see the same benefits we do. And so there's an interesting article here, and you know, I want to. There's a link right. Let me see. Where's my mouse? Right here. So there's a link right here. Okay, it says by the document dealing the Fed's recent meetup. So I clicked on that link and I got here. There it is. Record of meeting. And in the first part of the section, they talk about mostly how they can, you know, enslave people with debt, you know, how to stay on top of things, you know, commercial real estate lending, basically putting people into debt, putting small people into debt, personal lending, mortgage lending, construction lending, agricultural lending. They're just, you know, talking about all the different ways they just put people into slavery. That's kind of what they do. Right, student loan and consumer borrowing. They want to keep up with all that, right? So they just talk about all these things and the reforms, and you know, they just want to know all about how they could just keep on top of the world of slaving everyone. And then, you know, they just talk about this, blah blah. You know, they're just worried about themselves for the most part, you know. And then they get into item 5 right here, and this is where the article comes into play here. And let's just go over it for just a really brief. You all can read it on your own time. But does Bitcoin pose a threat to the banking, economy, activity, or financial stability? And you know, it's kind of interesting to see their answer. You know, they still view it as as marginal and used for illicit purposes and money laundering and whatnot. You know, it's their idea of Bitcoin on a formal policy level. It seems to be they're downplaying it, but yet the interesting thing is they're actually talking about it, which indicates to me another agenda is to the fact that they're talking about it indicates to me that there is some concern. The same reasons why they would talk about, you know, mortgage lending, and the same reasons why they would talk about, you know, mortgage foreclosure. They're worried about those things, right? Because it's going to directly affect them. Home mortgage lending. The reason, you know, all this that they're talking about. The reason why they're talking about it is because it's going to affect their control over you. That's why they're always having these meetings. They're always wanting to know what's going on. They want you to, whatever you have left, whatever shred of life you have left, they want you, all right, to hold on to that so you can give it to them. So they want that last piece of shred of life that you have. And that's why they're concerned. That's the only reason why they're concerned, right? So this whole thing is just about what they're concerned about. And then, you know, when you get to the point where they talk about Bitcoin, this is a concern. This is a thing for them to follow. I mean, why is it even in here? You know, if they're so concerned about a lot of these things, why isn't, like, you know, Item number 5, why is it Bitcoin? Why isn't it, you know, poverty or, you know, drug use? How can the banks deter drug use? Well, what? Well, maybe you should stop printing money. Your money's being used to buy these drugs. Your money's being used to fund terrorist activity. Um, your money's being used to enslave people. You know why? Anyways, I'm a little biased if you haven't noticed, but anyways, so it's in here, item 5, and you know they talk about a lot of things, and they're really downplaying a lot of what Bitcoin has the potential of doing. And then let me get to here, economic activity, blah blah blah, just your basic normal stuff. You all can read it. Um, where I'm going to get to is this last. Okay, so they talk about addressing illegal use. It's kind of interesting. They address the illegal use of Bitcoin, but they never address the illegal use of the money they print, that they create. They never address their own problems. They address problems of other things. So, anyways, here is. I'm going to talk about this last portion here, avoiding balkanization. And what they want to do is they want to regulate Bitcoin. And I find that very interesting, considering the fact that they can't even regulate themselves. But they want to see the regulation of Bitcoin. But at the same time, they don't consider it a threat. You know, it's marginal, it's minimal. So, you know, read this. I would say it reveals a lot of information. It's not what's been said, it's what's not said in here that kind of tells me a lot. So this is where the information comes in, and they talk a lot about trying to regulate it and everything, which I guess if it is coming, that's fine, but it's not going to affect me whatsoever. It's not going to affect the individual or the investors. As long as you're doing this for yourself and you're doing this on, as long as you're doing it as an individual, as an investor, whether you're a company or corporation or whatever entity you choose, as long as you're doing it for yourself, you can do so many things. Another thing you can do is you can become the processor. You can become the investor. You can become the user. You can literally build your own network, and you don't need a bank. The only thing you need a bank is just to have your legal tender, and everything else, the processing, the investing, the buying and selling, you don't need anybody. And really, that's what I think. That's what they're really afraid of, is that you no longer need a private organization that prints money. You don't need them anymore because, well, you're not going to be enslaved anymore. You can be free. You can be free of them, and you can start doing whatever you want and however you want. So read this article, or not. It's not even an article. You can read this. What are they calling it? And then they get onto more stuff. Economic discussion, activity. The only reason why these people really care about your wage or your business or your real estate or your spending or any monetary policy is because it just helps them enslave you. That's the only reason why they even address this. So there you go. Anyways, let's go up to the top. There you go. The board meeting. Federal Advisory Council and Board of Governors. So there you go. Take time to read this, and just get a bit. You have to get a better insight in what they're thinking and how they're approaching things, because I really believe that the only reason they care about you, they say they care about you, they care about the economy, because they know if it collapses, they're out. So they got to keep it going at all cost. Okay, they're keeping this operation going at all cost, which basically means at your expense. So anyways, let me end it on a chart here. There we go. I'm still on Bitfin. And let's do a quick price analysis. So Bitstamp's at 400. Bitfin is lower. Now Bitstamp is higher. BitC is the lowest, and then the Chinese is kind of in there with Bitfin. So Bitstamp is going to be highest now. So hopefully that can translate into either going sideways or up. Now there's a huge gap here. There is like a let me see, a $40 gap here. So there could be a good chance that it looks like it's really wanting to break out of this 10-period downtrend moving average here. It probably really wants to break out and hit up against here. The question is it going to hit up and go further, or it's going to go down back into the triangle? So we'll see what happens. So anyways, until next time, I think I talked long enough. Until next time, stay tuned. Feel free to comment, like, dislike, or even do a video response. And again, until next time, stay tuned. Bye now.